Have you ever wondered what the future holds for a company like Expensify, the app that helps simplify expense reports and corporate spending? In a world increasingly driven by digital solutions, understanding the trajectory of such a platform is crucial for anyone interested in tech, finance, or even just their personal investments. Today, we're diving deep into Expensify's price prediction, exploring what the experts are saying and what factors could influence its journey. Expensify, traded under the ticker EXFY, operates in the rapidly evolving expense management software market. This isn't just about tracking receipts anymore, it's about a comprehensive payments super app that aims to streamline everything from individual expenses to corporate cards and bill payments. The market itself is projected for significant growth, with a CAGR of over 10% in the coming years, driven by the demand for automation, AI-powered insights, and mobile-first solutions. This larger market trend provides a positive backdrop for Expensify, as businesses increasingly seek efficient ways to manage their finances. So, what are the analysts saying about Expensify's stock price? Current consensus among analysts leans towards a buy or strong buy rating for EXFY. Several firms have issued price targets, with an average ranging from around $4.25 to $4.75 for a one-year forecast. Some even project highs up to $5 or more. This suggests a potential upside from recent trading prices, which have seen some volatility. For instance, while the stock has experienced recent dips, it's worth noting that it has shown a significant return over the past year. But these aren't just arbitrary numbers. These predictions are based on several key factors. First, Expensify's core business model relies on subscription fees, offering various tiers for individuals and businesses, along with revenue from their Expensify card via interchange fees. Their Q1 2025 results showed an 8% increase in revenue year-over-year, and a substantial 43% increase in interchange revenue from the Expensify card. This growth in key revenue streams is a positive indicator. Second, the company's focus on innovation and expansion is crucial. They're investing in AI and automation to enhance their platform, which aligns perfectly with the broader trends in expense management. The significant increase in quarterly travel bookings through Expensify Travel, a 166% quarter-over-quarter rise in Q1 2025, shows promising adoption of new features. They're also strategically leveraging marketing, like their upcoming F1 sponsorship, to gain global visibility. However, it's not all smooth sailing. Expensify, like any company, faces challenges. While revenue is up, the number of paid members saw a slight decrease of 5% year-over-year in Q1 2025. This suggests a need to focus on customer acquisition and retention. The competitive landscape is also a factor, with other players in the expense management software space. Economic uncertainties and inflation can also impact customer spending and the overall market. Ultimately, Expensify's price prediction is a complex interplay of market trends, company performance, and competitive dynamics. While analyst consensus points to a positive outlook with potential for growth, investors should always consider the risks and conduct their own due diligence. The company's ability to continue innovating, expanding its user base, and effectively navigate the competitive market will be key to realizing these price targets. With that said, thanks for watching, and until next time.